the perfect setup looks like. It has no danger attached to it. The bottom edge did not have the perfect setup, but still gave us very close to the perfect setup. And I got top and safety in terms of trade. But look at what happened to the volume on the perfect setup. Look at the volume surge into a new high, closing at the highs. I know it's not quite the same as what we were just talking about, but it's still relevant to that conversation, isn't it? The big volume closing at the highs on a perfect sell setup on bonds for what it turned out to be one of the best opportunities, brilliant opportunity to make some nice monies. And you can start to see some, you start to see the US volume starting to creep into the markets now, obviously. And as we come into 20 past 1, we're obviously going to be looking at this as a possible top edge. We've got a kind of real flat top that's just been shaved off the top edge here. You can see somebody's came along here with a hedge trimmer and just taken the list right off the top edge here and just left those 4 pins. It'd be lovely to run those stops. And obviously, if we could run those stops, we could obviously look for the opportunity. Now, when we're talking about the 5s, 10s predictor, of course, we're looking at FOB NOB FYT. FOB NOB FYT. We can see that we can see the reason why that was a perfect sell. But when we look at the FOB NOB FYT just now, you can see we're well away from making this perfect. But we still have a few ticks to go here. We've got from 7s to perhaps around about 10s and 11s. You can see it's starting to work in our favor now. See how the blue line is starting to make higher highs? The blue line is starting to make higher highs. So hopefully we're going to see another perfect sell into the same price as we got the other perfect sell over here, right? So that would be too good to be true, but maybe it'll show up. If it does, guess what? I am going to hammer it. I am going to whack this really, really hard for this trade. Now, the only challenge I think we're going to be seeing, and it all depends upon how the fight develops from the higher bond price, but if the fight does drop significantly as bond prices trade up into this 10 level, then of course that sets up the right scenario. We're going to be looking for the fight to become a steepener. And obviously that's a steepening fight would obviously be short bonds. So that's the trade idea that we've got just now, is that short bond top edge, perhaps 10s, 11s. That would be probably where we need to get to for this to set up properly. I would think we would need to see about 10s or 11s at the moment for that trade to be the perfect sell. The perfect sell. So that's what we're thinking at the moment, is that trade there. Interestingly enough, this bottom edge was called on the tweets. I did say not yet because it hadn't set up at that stage. It hadn't actually developed. But you'll see at 10:30, I did tweet bonds maybe a long setting up, but not yet, because it wasn't perfect. I was literally taking 1s and 2s at that stage. The volume was tiny. So at 10:30, guys, was this first arrow. The first arrow. We did get an extra tick on the trade, but the value didn't really set up much better. But you can see the fight did make the higher high eventually. But when it did make the higher high, the bond had already started to move. So what actually transpired was that it wasn't the perfect bond trade, but it turned out to be it did turn out to be the perfect fight trade. You were able to get the perfect fight trade because the bond had already moved first. Sometimes the bond and the fight moves at the same time, in which case it's a bond trade. If the bond moves first and the fight still hasn't gone, then it becomes a fight trade. It becomes a 5s, 10s spread. So anyway, some great trades. Oil's been a funny player today. We've done business on oil, but it's always been unsatisfactory. And I explained to the guys this morning why oil was going to be unsatisfactory. And I hope everybody took on board what I was talking about why it was going to be unsatisfactory. It was still made us money, guys. It still made us some cash. But, you know, it didn't do probably what everybody might have thought it was going to do because it was too much. It just had too much, guys, and that's the problem. So this is what we were talking about here. We talked about buying euros. Well, if we're buying euros, what the hell are you selling oil for, right? Doesn't seem to make an awful lot of sense. Well, it does make sense because it's a hedge trade. And this is the reason why it's not going to make a lot of money. Because it's not where the money's made, is short oil or long euros. the money's going to be made by buying euros and being short oil. And you're going to combine the two to make your money because you don't know how the hedge is going to play out. You just know it's going to play out. So what we were doing this morning was we were buying euros through this phase here. And obviously when we were looking at oil, we were selling oil and closing out for a break-even trade. We were selling oil and making a profit and break-even. We sold oil, we sold. And I said to the guys this morning, I'm sure Tim must have heard me. I'm sure the guys that trade oil must have heard me. Cliff, I think, was trading oil as well this morning. I said it's not going to be a great trade. We know it's not going to be a great trade because we know that the oil price is going to be offset by the buyers coming in the euro dollar, which is going to keep a cap on the downside of oil. And what happened? Oil prices went back up again. Did exactly what we thought was going to happen because the trade wasn't an oil trade. It was a spread trade. So eventually all that selling on oil comes into this area here. Eventually all that buying on the euro comes into this area here. And the trade is making its money at that stage. In the middle, the long euro, the short oil. That's how it works. That's how it has worked. That's how it's made the money, right? But it just takes that little bit of time to understand these things, guys. It's not something that you just go, yep, that's going to be difficult, that's going to be easy. If there's too much value, and the value's been developing for hours, guys, it's more likely to be a spread. I've told this to Paul 1 billion times on gold, haven't we? We've discussed this hundreds of times on gold. The more value you see on gold, the less chance of it being a brilliant trade. Brilliant trades are when you see them developing early, not after they've already developed huge value. Brilliant trades are when you see them early. And I'm talking about brilliant trades from a retail perspective, because they're always faster trades. From a commercial perspective, the brilliant trades are the ones you see that have developed for hours, but they're commercial. They'll still take hours and hours and hours, and possibly even days and days and days. And that's why you can sell it and take profits and sell it and take profits and sell it and take profits. And you're still only making 5s and 10s on every rotation. And like the whole day's passed and you suddenly find you've taken 10 sells on the way on an uptrend and you've made $100. You've made 100 ticks, sorry. You've made 100 ticks would be brilliant, $1,000. But you simply realize that you've been selling all the way on an uptrend for a commercial short trade to eventually blossom into a trade 2 or 3 days later. And you've been part of it, but you've traded it differently from the way the commercial has traded it. So welcome on, guys. It's 20 past uno. And it's 20 past 1. We're in pretty good shape. We've had the bond trade which was brilliant. We've got the bottom edge euro, which is pretty interesting. It's developed a storyline which hasn't really evolved much so far today. We called a gold trade in the overnight session, which was a little bit special. We said that gold is very, very cheap, and we said gold is very, very cheap, and we should be buying into retested lows. And this was when the price was down at 1809s. It's traded at a high price of 1816s. And obviously, if you'd been buying with us on these retested lows here, you can obviously see that some of these retested lows, you can see some nice opportunities to pick up some long gold opportunities on these ideas. And you can see, obviously, you've made an absolute wicked gain. And that's all tweeted last night. And that profit has been several $1,000s per contract on the overall swing. It's phenomenal. Absolutely phenomenal. Hold on a sec.